Hello, dear friends, and welcome to our new and unique channel, Franklin Trade. If you aspire to succeed in the world of trading, you are on the right path. Here you will find the best tools and tips for successful trading. We offer top-notch training, the most up-to-date news, and the best software to help you achieve financial independence. But that's not all. On our channel, you'll also find opportunities for social trading, allowing you to follow experienced traders and increase your chances of success. We have an open channel where we provide a wealth of free content as well as a close team of professional traders that conducts daily trading sessions and offers personalized training. If you are tired of losing your deposits and seeking a path to success, Franklin Trade is your best choice. We guarantee that with our support, you will achieve the desired results. So don't hesitate. Subscribe to our Franklin Trade channel right now. Start working productively and turn your financial dreams into reality. Don't miss the chance to become a successful trader with us. Today in our very first video, we will talk about technical analysis patterns. Technical analysis plays a crucial role in trading, providing investors and traders with tools to analyze the market based on historical data. One of the important aspects of technical analysis is chart patterns that help identify trends, reversals, and entry and exit points in the market. Effective use and tracking of these patterns allow traders to make more informed decisions. So colleagues, be sure to watch this video until the end because in it I will share my knowledge with you and try to concisely but thoroughly explain a topic that is still completely unclear and important for many. It touched on the fundamentals of technical analysis, visually demonstrating to traders what they can gain from entering the market. Moreover, I will try to motivate you to the maximum, so in honor of the channel's launch, I am announcing a $500 contest that will be deposited into your account if you complete 4 simple actions. Subscribe to us on Telegram and to this YouTube channel, watch the video from beginning to the end, and leave a like, not forgetting to write a comment. The contest results will be announced in our open Telegram group. All winners will be announced there, so don't forget to subscribe. So, have you subscribed to the channel, left your like, clicked on the notification bell? So let's get started. Moving on to the analysis of the first currency pair, the Canadian dollar and the Swiss franc. Well, first of all, I will highlight areas of support and resistance on the chart for more convenient analysis. Then we can see that buyers are showing their activity as indicated by the trading volume indicator, resulting in an upward trend, touching the resistance area, but for now, buyers are unable to overcome it. Immediately after reaching the resistance area, sellers also demonstrate their activity. We can see how they increase their trading volumes, making a reversal on the chart, after which the trend heads down towards the support area. Now relative stability in the market is interrupted. We see that the trend chart clearly shows a transition in market movement to a flat, or what is also called sideways movement. Yes, of course, I can also note the impulsive movement in this flat, but neither buyers nor sellers have enough strength for a significant change in the market positioning. However, closer to our entry point, the trend begins to change. Once again, we see an increase in volumes by the bulls, and additional indicators point to an imminent rise in the asset. And it happens. We see how the trend reached the resistance area for the second time, a retest occurs, after which the trend breaks through the resistance area and confidently continues its upward movement. In this case, guys, everything points to the best decision being to trade on the upside, simply following the trend as the clear vector for the breakout will continue in the future. Therefore, I will switch to pocket option and invest in an upward trade for 3 minutes with an investment of $600. So, my friends, right now, I'm convinced I have chosen an excellent time to enter the trade because we are witnessing a strong upward trend and it's clear that sellers cannot interfere with it. Of course, one can speculate that they might attempt to correct or even reverse the trend direction, but for now, there is no basis for that. A breakthrough of the resistance level occurred after a retest, and all we have left to do is to watch the trade unfold. So, guys, while the first trading session is in progress, let me tell you about the most classic yet important patterns of technical analysis. It's quite interesting. Among the most common chart patterns in technical analysis, we can highlight patterns like head and shoulders, double and triple tops, flags or pennants, wedges, rectangles, and other. For example, the head and shoulders pattern signals a potential trend reversal. After the formation of a peak, the head, between two adjacent peaks, the shoulders, there is a possibility of a change in the price direction. To successfully apply chart patterns in practice, a few simple rules should be followed. Firstly, confirmation of the signal. The formation of a pattern alone does not always mean an inevitable price movement in the specified direction. It's important to wait for a confirming signal such as a break of a support or resistance level. Secondly, market context. Chart patterns should be analyzed in the context of the overall market picture. For example, if a chart pattern forms against the backdrop of a clearly defined trend, it has a better chance of successful development. And of course, don't forget that only practice and experience will help you analyze the chart correctly and accurately without relying on cues, allowing you to work quickly and productively. However, working with charts in any case is a complex and labor-intensive process. You need to continuously educate yourself and strive for improvement. And if you feel unsure but are ready to work as part of a coordinated team and achieve financial independence, the following recommendations are specifically for you. I invite you to become a part of our exclusive VIP group on Telegram, where you can expect a unique experience and new opportunities. Our team will provide you with individual analysis, identifying your strengths and weaknesses. In addition, you will master the aspects of trading psychology and learn to develop your own trading strategies. Under our guidance, you will gradually apply the knowledge you acquire in daily trading sessions. If you aim to change your life and achieve success, our team is ready to offer you all the necessary support. Just send us a personal message with the phrase, "I want to join to the club," and you will discover a lot of new things. It's important to remember that achieving your dreams requires a lot of effort, overcoming all your fears, and constantly striving for self-improvement. Well, all the necessary contact information is available in the description below this video. So, the first trade has come to an end, the analysis was accurate, and we see that the trend moved predictably upward, encountering little resistance throughout the trading session. Yes, there were minor impulses for the sellers, but this had no impact on the final outcome of the trade. We're recording a profit in the deposit. Let's move on to the second currency pair, the euro and the Australian dollar. Let's begin the analysis by highlighting the strong buying activity in trading volumes, after which the trend naturally moves upward. Next, we see another flat on the chart in which there is generally low market volatility, but at the same time relatively high trading volumes from both the bulls and bears. After that, on the chart, I can clearly see a technical analysis pattern called the cup. Both sellers and buyers are increasing their volumes, causing the trend to swiftly rise, passing all local levels and forming a new local high. More often than not, the cup pattern can indicate a bullish reversal pattern on the chart, which is what we see in our case. However, buyers do not have enough strength to break through the resistance area. We can clearly see that just before our entry into the trade, it's the sellers who have the upper hand both in terms of volumes and other indicators, which means we shouldn't expect a breakthrough of the resistance area, so let's trade downward. I return to the broker and invest in a down trade again for 3 minutes, this time with $700. Guys, this time I think we might expect some significant downward momentum from the sellers because their strength is not yet fully exhausted. As you may recall, they were consistently driving the trend upward before our entry, which gives them a fairly high reserve of strength. In any case, let's keep an eye on the trade because it's expected to be quite interesting. And while the second trade is in progress, let's go back to the topic of technical analysis patterns. I'll make a few more important remarks. When using chart patterns, it's crucial to set stop losses to protect your investments and lock in profits. However, you should also be aware of the limitations of this approach. For example, setting stop losses too close can result in their activation due to short-term price fluctuations, after which the market may return to the expected direction. This can lead to a situation known as stop-loss hunting, where a position is closed prematurely and then the market continues in the expected direction. In trading with chart patterns, there's also a risk of pattern overfitting, where a trader sees a chart pattern where it doesn't actually exist. This can lead to incorrect decisions about entering or exiting a position. And I understand that all of this might seem like advanced mathematics to a beginner and could potentially discourage them from engaging in what I won't hesitate to say is a complex business. However, don't worry, our channel is here to help you overcome all difficulties and achieve success in this field. Join to our open Telegram group where people with common goals have come together: personal growth, financial independence, and overcoming fears. In our group, you'll receive daily analysis and we'll share our thoughts and valuable trading advice. Special attention is given to preparing your psychology to help you cope with the challenges that may arise during trading. I believe that your success depends not only on knowledge but also on a stable psychological state. Now is the perfect time to take control of your life and move forward. And joining our friendly partner group will be your first step towards professional success. You'll find all the necessary contact links in the description below this video. Well, the second trade has also come to its conclusion. The analysis held up. As I expected, we had quite active and impulsive trading, but at the same time, the sellers consistently kept the trend below the entry point into the trading session, which ultimately led to a fairly successful profit taking. Again, we're recording a profit. Friends, in the end, today we've covered a basic but very important topic of technical analysis patterns, and I've tried to explain it as succinctly but as comprehensively as possible. Additionally, in just a few minutes of trading, I managed to earn a net profit of $1,190, which goes into my deposit. In conclusion, I want to remind you to subscribe to the channel as well as to our open and closed Telegram groups because we have more trades, more interesting news, and more learning ahead. In short, a wealth of valuable content aimed at helping you work as productively as possible and reach the highs that seemed unreachable yesterday. Thank you for all your attention, and remember, It's all in our hands.